your free weekly report available on Fridays. So going forward, we will be putting these up for free on Fridays. So anybody who subscribes to the free channel, you will get these for free on Fridays. Most of our other things will now be behind a paywall, especially our trade ideas, portfolio management, seeing our portfolio in general. Those have been behind the paywall for a while, but they will continue to be there. As well as I have a lot more stuff underway for everybody. Working with someone that's kind of helping me with the back end at the moment. And I'm trying to build some different widgets and different ideas. So a lot of the things that you're seeing on these weeklies will become a widget for you guys, so you guys can just go to these and see all this stuff on your own. So I'm building those at the moment. So some big things are coming. So hopping right into it. So the economic calendar, the week ahead. So basically here I just want to put out some stuff. So basically, you guys need to understand what's coming out week to week, especially if you're a short-term trader. My time frame, this stuff doesn't affect me as much as people on the short-term time frame. You need to understand these things, understand their significance. I'm mainly putting only the high priority things that you need to really worry about, but seeing these weekly and just getting an understanding of how we're going to handle the week ahead is going to be important. Currencies quarter to date. All currencies up against the dollar this quarter. I think we'll see that trend continue into next year. I think we saw the top in the dollar in 22. I think we saw the bottom in the market. Obviously, I've been saying that a long time. You can actually go back to my YouTube channel. If you go back to, I think it's in October 2022, you can see me literally call the bottom in the bull market, or in the bear market at that point. So definitely check that out if you want to, if you haven't seen it yet. But maybe I'll put a link in that if I get some time. Next chart number 3 is the OPEX monthly expiration. That's actually a triple witching too. So as this is a triple witch event, we'll probably see some consolidation coming in here next week. I wouldn't doubt we see some consolidation, but whichever way the trend breaks after that, at the moment everything's saying up. I would really follow it, but for now it's wait and react. That's what we do as traders. We don't sit there and try to predict. We wait and react. What's going to happen next week? Let's see what happens. That doesn't mean I'm going to pull off any positions. It means I'm going to wait and see which way we break. And if we break up, that's the way we should all follow. And if we break down, we should pay attention to that as well and adjust accordingly. Next chart is SPY seasonality. So just looking at that, in going into January, we might not be in as beautiful as a position as we've been in the last couple months. That's normal. November rally, December rally, completely normal. I even put out a thing on the Santa rally recently. So if you look at all those things, you can kind of understand. That's what I really try to do here. I'm trying to prepare everybody to understand what they should understand about these markets, what the flows are like, where you're going to make your money and where you're not going to make your money. And this is a better period in the market than usual. Summer is really rough, but the winter months are usually pretty good. They have a higher win probability than the summer months usually. So we'll see where that ends up. But once again, into the end of the year, just like I've thought this whole month, we'll probably see a nice strong rally into year end. Chart number 5, leaders continue to surprise. I mean, it's ridiculous to think that the strongest stocks continue to be the strongest stocks. It's normal. It's completely normal to have the strongest stocks continue to be the strongest stocks. You have tech leading the way. It's continued to lead the way. It's led the way the whole entire time. Great. That's what markets are supposed to do. The winners tend to continue to be the winners. You shouldn't be surprised by that. Doesn't mean it's going to last forever. There will be a shift. Shifts will happen. I think it'll be more reflationary coming. But once again, that doesn't mean because I think something, I'm going to do it. I think all types of shit. What I want to do is be ready for it when it happens. So when we start to see relative strength, we're going to continue to shift into different things. 6, earnings next week. Just looking at some earnings, once again, if you're in individual stocks, you're in the market in general, you're going to want to know these things. Fed rate probabilities. Looking at the rates are basically going to be the same. Once again, we're starting to see that they're talking about cutting. There's talk about cutting, at least in the probabilities, not really from the Fed yet, but pausing is kind of on the table, obviously, for now. Looks like going forward into January, there'll be a pause. Unless inflation gets out of control, which is also completely possible. 8, the NYSE bull bear indicator. Very strong market. Would not bet against it. Investment grade bonds, junk bonds, really strong. That's charts 9 and 10. 11, treasury flows. Biggest outflow since June 2020. So basically, what I'm thinking here is that we probably saw the bottom in bonds finally. People think this happens so quickly, but really, there's cycles inside of cycles. That doesn't mean I don't know if, and something that I've thought and felt for a long time, this is a feeling. This isn't a something to trade on. But I've talked about it a while ago where I felt like 2020 was the top in the bond market for many years to come. That doesn't mean there won't be trends inside of trends. For example, 18, the bond market, not yields, but the actual bond market started to go up. So if you look at the chart TLT, you start to see it go higher. That went on for 3 years. 2020 comes back the other direction. Now in 2023, maybe it bottomed here. So I'm thinking that we're close to a bottom. That doesn't mean that it's gonna, I'm just saying there could be a rally for a little while here. Doesn't mean I think the very long-term primary trend isn't down for bonds, or I don't think that we'll take out that high in 2020. But I think that bonds could start to move up here for a little while. 12, chart from Goldman Sachs. You are not you are not special. You are not a beautiful and unique snowflake. So all the funds are doing the same thing, which is normal, which is kind of why I find it funny where it's like you don't have to trade all these things that you don't know. You don't see me talking up individual stocks because most of the time I don't trade them. I don't know enough about them to care about them. I don't make money that way. I don't give a shit what it is. I'm just looking for the ways I make money. Like I make money doing it the way I do it. But seeing that all these hedge funds are kind of in the same exact thing over and over again is interesting. I'm not a fan of it. I'm not a fan of the individual stocks. It doesn't mean they're wrong. Obviously, they've made money in that way. But most of the time, I would assume if you looked at that net exposure going back to, the beginning of this year, it's completely different. And once again, it starts at 12%, but I'm more talking like February, March, even they chase performance. It's not just people always go, oh, the CTA signals. No, most of those aren't systematic. CTA signals mean stuff, yes, but they're not systematic. So if they're not completely all systematic, then what does it mean? Well, it means that they're chasing performance. They go at a certain point, they're shorting everything, and then you're going, shit, well, I better be on the long side or this is going to be terrible. 12. Bank of America predicts 152 rate cuts globally in 2024. So looking at that, we're seeing that there was a big possibility of rate cuts, right? We could see a lot of rate cuts coming in. I just think that it's also important to understand this is a prediction. Like we don't know. No, the Bank of America doesn't know what's going to happen in the future. I think what's important to remember here is that this is the way people are feeling at the moment. This is where the rallies come from. And so what's rallying is important. We're seeing stocks rally and bonds rally at the moment. If that continues, they don't really care. Like they're not going to come in and start to mess that up. Even though rates up here will put pressure on the market at some point, either way. What they won't do if bonds continue to go up and rates start to go up is start to cut rates. So they're not looking at that quickly, especially if oil is flat and all these things are continue to be flat. What has to happen is that the stock market or something else has to start to break for them to start really cutting rates aggressively. Nothing is breaking just yet. It will. It's not going to last like this forever. It will break. And when it does, then you'll start to see these major rate cuts. But at the moment, the market is just going, yeah, rate cuts, they're coming. Um, really, we have to just be really patient here and see what's going to happen. This is when bad things usually do happen in the market. I'm not saying that I'm predicting a crash or any of that crap. That's ridiculous. It's the reason why I hate when people say stuff like that. To me, that doesn't tell me anything about the market. Crash is coming. Cool. So I should be out of the market and miss out on all the gains because a crash is coming sometime. That's ridiculous. That is not trading. So when you tell a trader that a crash is coming, nobody cares. You shouldn't care. You should be able to put on your positions and just go, well, my system is blank and well, the trend is up. Well, my fundamentals are, like you should be able to do that and handle those things and trade like that. If you're always in fear or fearful of the market going down or going against you, like you never be in the market. There's always fear out there. There's always a recession coming. There's always rate hikes and all types of scary stuff happening all the time. You have to figure out how you trade and to continue to trade through those things. Commodities quarter to date. Wheat is leading, which I thought was really interesting. Wheat came all the way back and took the leadership away from gold, which is quite interesting. So wheat's doing really good, silver doing good, gold's doing good, copper is starting to turn up. And we have a lot of these positions in the winners, and we don't have much of the losers, which is also really important. That's how we want to trade. Um, at the moment, we don't have any energy positions. We did have a trade in energy. It did go away pretty quickly. Made a couple bucks on it. We'll see if that comes back. But for now, we're flat most of the energy sector, and we're just kind of seeing where the rest of these are going. Things like silver, copper, um, cocoa, gold, silver, wheat, soybeans, even. Seeing where these are all going is going to be very important. And so we'll see where this all ends up. Palladium. This is the most commercial buying I've ever seen in something ever. I see things break into levels where you go, oh, well, commercial buying is pretty crazy. Once again, it's why it's important to not trade before the signal. We're looking at this and we're going, okay, we're at a significant level. When you just buy things like that, you will lose your ass in this market. This is not a predictive thing. This just tells you that a bottom is coming. And when that bottom comes, the rally will be massive as this positioning unwinds. That's it. That's the most important part of COT. That's it. Nothing more important than that. That's what we need to know. So we see all this on the bottom part of this graph. You'll see there, or this chart, you'll see there's open interest. Open interest is rising like crazy. So that's a lot of positioning that has to unwind. So when we see a bottom, we see a buy signal, I will let everybody know. And that's the time I'm going to be buying. And I would suggest that's the time to wait for as well. 15. Everybody loves a double top. Everybody loves it. They love double tops. They're going to talk about this every day. And then when the S&P gets close to it, they're going to talk about that. The Dow's already at a new high. So they'll continue to talk about these fucking double tops every day of their life. Double tops happening. It's coming. Double tops coming. Really, I haven't found much of a statistical significance in tops like this. Most of the time, it just breaks right through it. Doesn't mean that it's not significant if it breaks through and comes back down through it. That could be significant, but for now, don't get, oh, I better pull off all my NASDAQ position. Think about Bitcoin 20. Bitcoin gets all the way up to 20,000. Everybody who had their position for that long because they all bought during the frenzy in 2017, they start pulling their position off the second it gets back to positive for them. It goes up to $60,000. This happens all the time, because if it didn't happen, there would be no such thing as rallies or trends. Like this happens, it goes right through them. It's so just be patient. It'll probably consolidate. It could do all types of stuff around there, and the VIX is really low. So I'm not saying we're just going to blast through and everything's fine forever. Just be patient here. And Bitcoin chart. Just putting a Bitcoin chart up. Nothing major to talk about. Just trends are going good. We're hanging on to our position. Nothing to do here. All right, guys. Hopefully you guys will subscribe to this weekly report. I will be putting these out more and more. I will be adding all types of things for everybody to use as traders, things that will help you to trade. I'm running a bunch of ways to kind of put together a risk management system for everybody so that you can build it custom for yourself. This is I'm racking my brain to try to make it fit everybody's different style, so you can just kind of put in your own indicators into it. So I'll figure it out, and we'll talk soon.